Hey everyone, and welcome back to the channel. Today, we're diving into a topic that so many of you have asked about: how to get started in trading and actually see some success. It can feel like a huge, intimidating world out there, but I promise, with the right foundation, you can navigate it. So, grab a notebook, because we're about to break down 10 essential tips that will help you maximize your potential profits and, more importantly, minimize those beginner mistakes. Let's get into it. First up, and this is non-negotiable, educate yourself before you risk a single dollar. I know, it's the boring part, right? You want to jump in and start making money. But trust me, the market will humble you very quickly if you don't know what you're doing. Read books, take online courses, watch videos from reputable traders. Understand the basics like market orders, limit orders, technical analysis, and fundamental analysis. Think of it like learning to drive. You wouldn't just hop into a race car without any lessons, would you? The market is no different. Your knowledge is your seatbelt and your roadmap. Tip number 2 is to start with a trading plan. What does that mean? It means you need to define your rules before you enter a trade. What are your financial goals? How much are you willing to risk on a single trade? What are your entry and exit signals? Writing this all down creates a business plan for your trading. It removes emotion from the equation. When you're in a trade and things get intense, you don't have to guess what to do, you just follow the plan. A trader without a plan is just a gambler. We're here to be traders, not gamblers. This brings me perfectly to tip number 3, master risk management. This might be the single most important tip on this entire list. A popular rule of thumb is the 1 to 2% rule. This means you should never risk more than 1% or 2% of your entire trading capital on a single trade. So, if you have a $10,000 account, you wouldn't risk more than $100 or $200 on one position. This ensures that even if you hit a losing streak, which you will, you'll still have capital left to trade another day. The goal isn't to get rich on one trade, it's to stay in the game long enough to be consistently profitable. Tip number 4, practice with a demo account. Almost every major broker offers a demo or paper trading account. This is a simulation that lets you trade with virtual money in the real market environment. It's the perfect, risk-free way to test your strategy, get comfortable with the trading platform, and build your confidence. Make your mistakes with fake money so you don't have to make them with your real, hard-earned cash. Treat your demo account seriously, as if it were real money, and only move to a live account when you're consistently profitable in the demo environment. Okay, tip 5 is a big one for your mindset. Understand that losses are part of the game. Every single professional trader, no matter how successful, has losing trades. It's a statistical certainty. The key is not to let a loss derail your entire strategy or your emotional state. Don't fall into revenge trading, where you jump right back into the market to try and win back what you lost. That's a recipe for disaster. Accept the loss, learn from it if you made a mistake, and stick to your plan for the next opportunity. Your win rate doesn't have to be 90%. Profitable traders often win only 50 to 60% of the time, but their winning trades are significantly larger than their losing ones. Which leads us right into tip number 6, use stop-loss orders. A stop-loss is a preset order you place with your broker to automatically sell a security when it reaches a certain price. This is your ultimate safety net. It takes the emotion out of cutting a loss because it happens automatically based on the risk you defined in your trading plan. Setting a stop-loss is like deciding asterisk before asterisk you get in the car exactly how fast you're willing to go. It prevents one bad trade from wiping out a significant portion of your account. Never, ever enter a trade without a clear stop-loss in mind. Tip number 7, keep it simple, especially at the start. When you first dive into technical analysis, you'll see thousands of different indicators with crazy names. It is easy to plaster your charts with so many lines and graphs that it looks like a modern art piece. This is called analysis paralysis. You don't need all that. Start with the basics. Learn to read price action, support and resistance levels, and maybe one or two simple indicators like moving averages or the RSI. A clean chart leads to clear decisions. You can always add more tools as you gain experience, but simplicity is your best friend as in the beginner. Coming in at number 8, don't follow the herd. You see a lot of hype online about the next big thing or a stock that is guaranteed to go to the moon. This is usually driven by FOMO, the fear of missing out. Chasing these hot tips is a quick way to lose money. By the time you hear about it, the smart money has likely already made its move and is looking to exit. Stick to your own analysis and your own trading plan. Do your own research. A profitable trade is one that fits your strategy, not one that everyone on social media is screaming about. Tip number 9 is a little more personal. Keep a trading journal. This is one of the most underrated tools for improvement. For every trade you take, win or lose, write it down. Record the date, the asset, your entry and exit prices, and most importantly, your reason for taking the trade. What did your analysis show? How are you feeling emotionally? Over time, you'll start to see patterns. You'll see what works and what doesn't. You'll identify your strengths and your emotional triggers. A trading journal is your personal feedback loop for becoming a better trader. It turns your experience into expertise. And finally, tip number 10. Be patient. Trading is not a get-rich-quick scheme. It's a marathon, not a sprint. There will be days, or even weeks, where there are no good trading setups that fit your plan. The temptation is to force a trade just for the sake of being in the market. Don't do it. Patience is a virtue in life, and it's a profitable skill in trading. Wait for the high probability setups. Waiting for the right pitch is what separates the best batters from the rest, and waiting for the right trade is what separates the best traders. Your capital is your ammunition. Don't waste it on bad shots. So there you have it, the 10 essential tips to start your trading journey on the right foot. It's all about education, planning, risk management, and discipline. If you found this video helpful, do me a huge favor and hit that like button. It really helps the channel grow. And make sure you subscribe and turn on notifications so you don't miss our future videos. Thanks for watching, and I'll see you in the next one.